Welcome back. It's Tim and Julie Harrison, and this is your favorite daily real estate coaching and training podcast. We've got a great show for you today. It's called The Market's Not Crashing, but Your Scripts Might Be. Julie has one, two. How many points do you have for us today, Julie?
I think I have six.
I think
Yeah,
so
looks like
too.
six
You have
and a
six.
summary. Yep.
Before we get to point number one, I want to start out by thanking all of you for the rather overwhelming response that we had to the podcast that we did last week about health. And that was on Thursday. Is that right, Julie?
Thursday. Yep.
Right. And so the Thursday podcast, if you've not listened to that one, evidently it was a home run for a lot of the listeners and the viewers. And I want to thank all of you because we were seriously nervous about doing that. Last time we meandered in talking about anything other than real estate. We got a lot of really interesting comments, especially over on YouTube, telling us to stay in our lane. But we got none of them this time. So I'm really thankful for that. In the meantime, if you've not yet listened to that podcast last Thursday, make sure you go back and listen to that one. It's all about essentially how to get your health in line. Julie and I are huge advocates of proactive healthcare. In other words, doing the tests and whatnot that are necessary that are going to predict what your health outcomes might be into the future and how you can be proactive in preventing a lot of the maybe the problems you'd have 6 months from now or 10 years or 20 years from now. So definitely go back and listen to that show. Again, thank you for all the positive feedback. And I also want to thank all of you who've responded to your about my interest in picking up some coaching clients again as elite coaching clients because I wanted to have 10 coaching clients, and I've gotten far more than 10 folks that are interested in being in my schedule, most of which I would say, just being transparent here, weren't a good match because maybe not where you wanted, maybe not where I wanted them to be in their careers, just not somebody that I wanted to, essentially talk into being a regular coaching client with me because where they were, I think, developmentally, professionally, financially, health wise, and whatnot, they would have been a better fit for, frankly, a lot less money with one of our other coaches. And so that's why I suggested they speak to one of our great other coaches. But for those of you, it's now about six who are really, truly elite level. And just, I'm going to give you the profile of what I'm looking for specifically. Somebody who is at the top of their game, looking to go back to or looking to go to the next level. Someone who was at the top of their game in the past and wants to get back to where they were, or somebody, and these frankly are the greatest challenge, but also give me the greatest pleasure, to be honest with you, because it's the most fun, are people that are frankly newer in the business, 5 years or less, who've really outperformed the market and just want direction how to go to the next level. I had a really fun one
Hmm.
that I decided to take him on. He was essentially not really sure how he went about doing the success that he'd done. He'd already sold like 300 houses in like 3.5 years or something. And, he was buying leads here. He was doing open houses there. He's getting referrals from this other source, all the rest of it. And so when I talk to somebody like that, I get really excited because that's somebody who clearly, without even ever hearing it from Julie and I, he's doing what he does want to do and he does want to do at the highest level. And with a little bit of direction, somebody like that's going to be incredible. So wherever you are in your spectrum of your real estate career, if you're interested in having an elite level coach, and just to be clear, elite level coaching isn't just sales skills, it's that, but it's also, we're going to talk about health, we're going to talk about wealth building, we're going to talk about, I literally, with your permission, of course, I want to have you set up a Monarch Money account and allow me to monitor it for you. I want to go in there, and if you do have a financial advisor, I want to look to see what that financial advisor is advising you to do. I want to have a holistic relationship with you. And again, if you don't want, if you don't, you just want me to focus on sales skills, that's fine. But it really, the vision I have for elite coaching, for Julie and I in particular, is to have this complete relationship with you guys where we can help you on all aspects of your life versus saying, well, we're going to help you build your real estate business, but whether you actually build wealth from that, that's somebody else's problem. Or whether your health actually stays in tune with your ambitions financially, that's somebody else's problem. I don't want to, that to me always, that approach feels insincere. And so what we're looking for and what I'm looking for is 10 coaching clients that really are people that want to operate at the at the next level. It excites me, as you guys hopefully can tell, to get back into elite coaching. Now, I want to share with you something else that Julie and I thought of the other day. We haven't quite figured this out yet, but this is what we're going to do. For the elite coaching clients that are in Julie and I's schedule that want to participate in what I'm about to describe, here it is. It's going to be called My Journey, and it's going to be My Journey, Julie Harris. And then there's going to be and I want you to think about the accountability that this will entail for you. There's going to be a monthly podcast interview where Julie and I are going to interview you, and we're going to ask you usually the same 5 or 6 questions, where you're going to be essentially reporting back to all the listeners about your journey in your real estate career, specifically as an elite level coaching client. Now, why are we doing that? We're doing that ultimately because I know for a fact that external accountability, especially being embarrassed, is going to be one of the greatest tools to get people to do what they don't want to do, and they don't want to do at the highest level. So let's say where I'm starting my journey with these 10 new guys, and they're starting, the 10 new coaching clients, elite coaching clients, and we're going to, write a business plan out. We're going to do the real estate treasure map. They're going to have their specific goals in mind for their 5 areas of life. And then I'm going to do a podcast interview with them. It's going to be called My Journey, Their Name. And they're going to state what their goals are. And then we're going to create action plans. And all the viewers and the people listening on iTunes and whatnot are going to be able to see what the plan is that we've created. And then on a regular basis, we're going to go to the point where, they're going to check in, they're going to have accountability, they're going to be reporting to the world what they've actually accomplished. And we have literally tens of thousands of coaching clients all over the world. Our goal isn't to embarrass them. Our goal is to make it so that we can all celebrate together their wins. And the people I'm going to be working with, I'm not too worried about them not accomplishing the goals that they set for themselves. Frankly, especially with me as their elite coach, I'll make sure that they do. And so every single time when they do these interviews, monthly, they're going to be celebrating their wins. All the listeners, all the podcast viewers are going to be able to celebrate their wins along with them. They're going to talk about their real struggles. They're going to talk about all the challenges and all their wins, all the rest of it. So it's going to be kind of like a very intense, maybe half hour to 45-minute monthly interview called My Journey. And that is going to be something that we're going to do for our elite level coaching clients. Now, this is another thought. If you're in an EXP, this is going to be a great tool for you to use to build your revenue share group, because no matter what revenue share group you're in, you're going to be able to co-sponsor with Julie and I. So you're going to be reporting to the world about your forward progress and your momentum in your real estate business with Julie and I and our coaching staff as your elite level coach. And then you're going to find people that are going to be attracted to you, want you to be sponsored by them. And then you're going to co-sponsor with us. I know I'm speaking hieroglyphs and all kinds of foreign languages to those of you who aren't in EXP, but those of you who are in EXP, this is a really fantastic way for you to go about building your revenue share group. And you can see the benefits of that. For the rest of you who aren't in EXP, this is a fantastic way for you to finally have the momentum, external and internal, to really truly hit it out of the park. And I'm incredibly excited about that. And honestly, I'm surprised that I've retired from coaching 2 years ago. I'm really surprised how motivated I am by the calls I've had for the last few days, talking with some of you about whether I'm an appropriate coach for you, whether you're an appropriate client for me, or whether one of our other coaches is a good fit for you. So anyway, Julie, what are you thinking?
I'm not surprised at all, because you have a lot to give to them. And I've been a fly on the wall for a few of those calls, and there's a lot of interesting people. I think what you just described, and there was a lot to that, between the My Journey interviews and things like that, as well as working on their health, working on their investment, their wealth, the physical goals, maybe even some spiritual goals, the things that are in the 5 areas of life, certainly. But what you described is the next level for agents who are already at a very high level, to help bring you back to what was the point of this whole real estate career in the first place. To not just give you the recognition and the encouragement. Most of you already are pretty good with that. It's literally taking you to that next level so that you can see and you can reap the fruits of your labor.
Yeah, exactly. No, well, so every single person I've talked to so far, with the exception of one, I think, has had a real estate coach in the past. Mm-hmm. And I asked them about their experience, their likes, what they like about it, what was the bad things about it. And really, it was not what they signed up for. All of them felt varying levels of disappointment, is how they expressed it to me, because they felt like, there's 5 areas of life, let's just say. And they were only working on the real estate aspect of it, while all the other areas of life were being neglected. And that's not really doing a great job as a coach, because let's just say, for example, you hired Julie and I, and I'm not qualified to be a fitness coach, but let's say you hired us to do that, but we weren't paying attention to your finances. We weren't paying attention to any of the other aspects of your life. We're kind of doing you a disservice. I mean, you hired us to be a physical coach, but what about the other aspects of your life? They're kind of getting left along the wayside, along the road.
Helping you to figure out how to work out, but ignoring your nutrition.
Right,
right?
exactly. And
Yeah.
when Julie and I, like, for example, when we spoke last Thursday about HRT, hormone replacement therapy, and a lot of this stuff. And I'm not a doctor and I'm not going to prescribe medicine. I'm not know those things, but I do know enough about it to have a conversation about it. And I also know who I can refer you to, a doctor who then will help you. A lot of them are, telemed and whatnot. And then you can have those conversations with them and decide whether you want to pursue HRT, whatever, right? So the point of it is Julie and I are approaching this like as if you were a close friend of ours, frankly, and you are coming to us and you're asking us for guidance on how to, become a deca millionaire, how to, have multiple homes, how to have financial freedom finally, because that's really ultimately the reason you got in the business, how to build a scalable real estate practice that's based on listings, those types of things. But really, we're looking for people that are already mentally, at the very least, operating at that level, because those are the folks that are going to get the most benefit from what we have to offer. Otherwise, we're going to end up talking with folks and they're not at a place where they're ready to receive the information. I know this sounds, highfalutin, but I'm just being completely and totally honest with you guys. It's like, what's the point of talking with someone about wealth building when they haven't learned how to generate income consistently, right? You guys get it?
Well, but there is coaching for that too. I mean, that's a
Yeah.
lot of what we do in Premier Coaching, because we do have a lot of coaching clients, a lot of our elite coaching clients. I feel like we've raised them in a sense through their business maturity from that stage. I mean, we've had many coaching clients that have been with us for more than a decade and did start out at that level, but now are at this level and now they're wanting more. Does that make sense?
Yep. And so the big takeaway here is if you think you're a good fit for Julie or I at the elite coaching level, please do text me directly, 512-758-0206, and text me just send me a text with your information about yourself and your real estate career. That saves me a whole bunch of time. Then I can read it a few times. I'm going to research you online, going to find out, whether you have any listings and the rest of those types of things. And then we're going to have a one-on-one coaching call and I'm going to answer all your questions and we're going to kind of, feel each other out as to whether or not we're a good fit. And if I'm not, that's perfectly fine. We've got a lot of great staff coaches that'll probably be a great fit for you. And yes, so this is something, it's only open to 20 agents, period. I'm only personally going to take on 10 clients. Julie's basically got maybe 2 or 3 spots open. I don't know. Some of her clients are on summer break. So people have been asking us about the money and all the rest of it. That's what the point of the call with me is going to be. 512-758-0206. Send me a text, 512-758-0206, and we'll move forward. And again, thank you for all of you who have given us great feedback on the shows last week that we were a little nervous about doing. And really thank you for all of you who are interested in being in my schedule as one of my elite coaching clients. And yes, I am thoroughly looking forward to experiencing the My Journey new podcast series with all of my new elites. Hopefully all of them are going to agree to it. And I understand if they're not going to want that level of exposure. But for the rest of you who do, and you're really looking to take your business and professional lives to the next level, let's go. 512-758-0206. Julie Harris, let's roll into our topic again. The market's not crashing, but your scripts might be.
Yes. So these are talking points. Check your own scripting. Some of you haven't updated it in months or after a quarter or even the beginning of the year. So don't just be informed, be useful, bring value to your conversations. The market is shifting, and that's not a bad thing as long as you know how to talk about it. You can't be a secret agent right now. Buyers and sellers are overwhelmed with confusing headlines, but few people are giving them real answers. And that's where you come in. All the points today that we're talking about, you could do mini videos, you can work them into conversations, you can work them into your lead follow-up. So let's jump into number 1, the job numbers. Why do we care about job numbers? The Bureau of Labor Statistics, or BLS, reported that 139,000 jobs were added in May. Well, that sounds solid, but there's more to the story. And why do you care? The BLS revised the last 2 months down by 95,000 jobs. They always come out with these reports and then they correct them later. A separate report from ADP said only 37,000 jobs were added. Well, you can crunch all of those numbers, but here's what you say. Even though the headlines sound good, the real numbers show the job market is softening. Why do we care? Because that means the Fed may lower interest rates sooner than expected and sooner than reported. Smart buyers will act before this happens. So let's take this into coaching. One of our coaching clients used this exact explanation, talking about how, yes, probably rates are going to come down, but why would you wait until the market heats up again and you have to compete for properties? So guess what they did? They wrote an offer, negotiated it, got in contract, and negotiated the seller buy down. They went ahead and bought before they have to compete. They took advantage of more inventory, and now they're in contract instead of waiting. So this is the type of conversation you can have just about that one little point. That brings us to number 2, which is all about inventory. Now, we reported a little bit on this last week. I think we talked about it on our Friday show. Yes, there are more homes for sale, but there's still fewer selling. That doesn't mean there's none selling. There are over 1 million active listings right now, and that's more since December of, 2019. So that's pre-pandemic. We have a lot more inventory. It's actually up 31.5% compared to last year. And we're talking about talking points today. How are you talking to your buyers? Are you following up with all those buyers that were waiting for more inventory? Are you waiting? Are you still stuck in that no inventory and they're in your drip system and we're waiting? Or are you actively setting up showings?
Well, Julie, let's level off. Okay.
Sure.
So the first two things that you said, first of all, I know that the inflation rate is down lower than it's been in a long time. I think it's less than 2%. So I'm not sure if that's in your notes.
That's
you were talking about
5, but yes.
Okay, sorry. So you're talking, oh, it is, you're right. So you're talking about also the new jobs that are being created. The new jobs that were being created were private industry jobs, not the government. Okay. So
Yes.
the truth is that what we're seeing is a return to the government no longer being the major employer, and small businesses and medium-sized businesses are starting to feel confident again to hire people. So keeping that in mind, what we're going to next see, which makes sense, is we're going to see, and I'm making sure I'm not stepping on one of Julie's points. Nope, but she did insinuate this. We're going to see interest rates fall. There's something that you guys are hearing in the news called the shadow Fed president. And what that essentially is that Jerome Powell is in his last year as the Fed president. For whatever reason, he's not lowering the interest rates, even though under previous political regimes, he would have lowered interest rates a long time ago. But now look what we're seeing. We're seeing a slight softening of employment. We're seeing inflation drop, and we're seeing all the essentially the normal indicators that the interest rates are ready to drop. The essentially the government now, Trump administration has said that they're going to have a shadow Fed president. I know this sounds very nerdy, but just this is the important takeaway. And they're going to say who the shadow Fed president is, essentially who the next president's going to be. And I'm sorry, the next Fed president's going to be. And no one knows who he is yet. He's going to essentially start talking about the lowering of the rates, which effectively will start having the same effect in a short while of the rates being lowered. So bottom line is that the Fannie Mae came out last week and said that they're predicting by the end of this year that the average 30-year fixed mortgage rate is going to be down by almost a complete point to 6.1%. And that's a 30-year fix. That's on a 15 or a 525 or a 723 or all these other types of mortgages. These are all good things. Julie said something else. The number of homes for sale, not including new construction, is now at obviously it's balancing out in most of the markets. I know in Miami, and Julie mentioned other areas. Austin, we're definitely seeing a lean towards the buyer side of the market. This is a really good thing for the housing market. We need there to be a balanced market, if not a little bit of a buyer's market. That we need there to be more buyers in the market. We need there to be more homes for sale for folks to be able to move up or move down. That's what's been slowing the whole entire market down. Is not enough inventory. I personally don't think the housing prices are the problem. I think the payments are the problem. So if there's more inventory and you have rates that are going to cause the payments to go down, we're going to see what Julie and I have been predicting, and you guys can research this yourself, about this being the start of what's going to be a 25-year housing boom. So again, if you want to research more about that, research by going to Google and just put it in make housing great again, and you'll see all of our past podcasts on that topic. It's very fascinating to me. A lot of people were thinking that Julie and I were just being cheerleaders of the housing market. But if you read our points, it all boils down to really one prominent takeaway. Demographics. The demographics are pointing to nothing other than the simple fact that there's an enormous demand, and it's going to be doing incredible, like almost hockey stick increase in demand for homes, new construction, resale. You're talking about baby boomers, downsizers, generation millennials, all these different massive groups of humans in America that are going to be wanting to buy homes. And it's not going to slow down. If anything, it's going to increase the number of people that need to buy homes. And there needs to be a whole bunch of new homes built. Point is, you're in the right place at the right time in the right industry. because everyone wants what you have to sell. So that's a good thing. Julie?
Yes, well, that's right. And we're talking about affordability all the time. One of the things that isn't mentioned enough, I think, with higher inventory and again, potentially lower rates, with higher inventory, there's less competition. Remember back in the pandemic where buyers had to guarantee the appraisal gap and they had to go $50,000, $200,000 over in cash? That wasn't that affordable, was it? So with more inventory and less competition, that by itself, it's funny. Our next point is prices are drifting down, not crashing. Prices are adjusting in some metros, but there's no crash. 60 out of the top 100 metro areas have become what we're calling a balanced market now. Most were small adjustments down. A few were steeper, like Bridgeport, Connecticut is down 13%, and Durham, North Carolina is down 10%. So meanwhile, places like Toledo, Ohio, we always get excited when our rentals are doing well in Ohio, not Toledo, but in Ohio and Baltimore, Maryland, saw price increases of 10%. So it's not happening uniformly, but we are having some prices come down. Most of what they're talking about is the list prices are coming down year over year. It's not a crash. It's a healthy reset.
Hover there, because that's where people get confused.
That's right.
So when you hear about prices falling, I want you to remember statistically, most people in the United States that have mortgages, I'm going to round up and round down just to make the point succinctly, right? Something like 50% of all homes in the United States are owned without a mortgage. I know a lot of people don't believe that. Do your own homework and you'll discover what I just said is true. Close to 50%. And then of the 50% that have mortgages, okay, so there's 100, right? 50 have no mortgages. The 50 that do have mortgages, 25 of those have at least something like 50% equity or something crazy
That's
like
right.
that. And virtually all of them have super low interest rates. Why am I telling you all this? Because chances are if somebody has a house for sale right now, they have an enormous amount of equity, especially if they've owned it for 2 or 3 or let alone longer years. Huge amounts of equity. That equity means that even though their prices, you put your house for sale, it's aspirationally priced. Never say overpriced to a seller. They'll hate you if you do. Aspirationally priced. So it's a little bit, off market. And even so what's happening is they're having to lower their prices after the houses are for sale. But that doesn't mean they're losing money on the houses. And if you read these headlines, they're written by mostly ignoramuses. They're writing it as if it's essentially the beginning stages of a housing crash. During the housing crash, where Julie and I were coaching, tens of thousands of agents, we saw that what was happening across the country was prices were falling, and the prices were falling to a point where they were less than what the house was worth. You guys get it? Or less rather than
and a lot less than what was owed was the point.
That's what I should have said. So somebody had a house for, it was, $500,000, but they owed $525,000 on it. And the house was worth actually $475,000. That's called being underwater. That, my dear friends, is not happening, at least not in huge numbers. There could be a situation where someone bought a house in the last couple of years in one of these markets where prices are falling. They didn't put a lot of money down. They could be underwater. And if you have a coaching client, if you have a real estate seller like that, I'll suggest to you, depending on what their interest rate is, you need to look into having them do an assumable mortgage where the buyer can just assume their mortgage. And, we've talked about that a ton in Premier Coaching and on past podcasts. Or frankly, if that doesn't make sense for them, have them rent the house out. Because the way the
forbearance, there's so many options now. It is not even remotely, in the front end of the housing crash, nobody knew how to do any of this stuff. And that's why it took a long time to work through all of that inventory. There's nothing similar in today's market. We've done whole podcasts on this, so we should probably move on to our next talking point, which is something that we haven't talked about very much, and that is that homeowners insurance costs have gotten out of control. Why do we care about this? Well, this is now going into mortgage qualification on a whole other level because it affects their payment. Now, keep in mind, if you're a higher end luxury client, you might be able to self-insure and opt out of that if you're paying cash. But it has gone up 38% since 2019, especially in wildfire, flood, hurricane risk areas. And in places where you wouldn't normally expect that, like look what happened to Asheville, North Carolina. They're having higher insurance costs because nobody ever thought that there could be a hurricane there. So adjust accordingly. And maybe if you're in a market like that, that would be a good standalone video about how you have connections to different insurance agents with different types of solutions. And maybe that's something that would cause somebody to call you for more information because they're thinking about moving. So that is a little minor talking point, but it's become a major thing in certain markets, certainly in Florida. And, it depends on how close you are to the coast and what zones you're in and all that kind of stuff. But if that affects your market, then you owe it to your buyer and seller clients and yourself to know something about that.
Well, if you have a seller that's facing down a price reduction because you're having a hard time finding someone that wants to buy a condo in this building because the homeowner's insurance went up, you could have the seller prepay that homeowner's insurance for 1 or 2 or 3 years on behalf of the buyer, thus probably the seller will probably net more than had they reduced the price. So be creative. We teach you guys how to do this in Premier Coaching and hopefully on this podcast as well. All right, Julie Harris, inflation is slowing. I kind of tipped the hat on this point earlier, but still a good one.
And it's a good thing. So CPI, that's Consumer Price Index, measures inflation, how much prices are rising. And in May, it came in lower than expected by quite a bit. Core inflation, including food and gas, rose by just 0.1%. When you average the last 3 months, inflation's up only 1.7% per year. And that's below the Fed's expected 2% target. So without rent and housing costs, CPI might have even gone negative. Why do you care? Well, inflation is easing. That means interest rates are likely to drop. And when that happens, buyers who waited may face more competition and higher prices. Again, you see that talking point coming out with regards to inflation, the jobs report, and the inventory report. So one top producer turned this stat into a reel and used the caption, 1.7% inflation means rate cuts are coming. Are you ready? And they got 14 direct messages back, just simply wanting more information and what to expect. You can handle those calls, pre-qualify, why do you ask? Are you thinking about, making a move? What's most important to you? All the things that we teach in coaching, those questions to dig deeper. The point is to make your phone ring, to get your texts coming in. So the next point, and I think that this is one that everybody seems to be stuck on, rates are quote, stuck around 7%, at least for now, but maybe not for long. Federal Reserve isn't expected to cut rates in June, but maybe by September. By even July, some people are estimating. So probably a quarter point, and then that happens, mortgage rates could follow. So that's good. But remember, you can always lock in now and refinance later. You can ask for the buy down. You can do an adjustable rate. You can do all of these different options. So I would encourage our listeners not to stay stuck on the interest rate story. Buyers, as you said, Tim, it's not so much about the price or the rate. It's about the affordability of their payment. So you probably have buyers in your pipeline that are 100% okay with their pre-qualified payment, but you're stuck because you think that they're not going to do anything till rates are into the mid sixes. Maybe your buyers are 100% okay with it and you just need to find them a house.
Well, to Julie's point, think about this. If there's right now someone's worried about the interest rates and whatever, you can always, refinance like Julie just said.
A lot of the lenders are offering free refis for up to 18 months out.
That's fantastic. Well, so what will happen, dear listener, when the interest rates fall and house payments fall, what's going to happen? Will there be more buyers in the market or fewer buyers in the market? Okay, then what will happen to the price? Obviously more. And what will happen to the prices of homes when there's more, essentially more interest, when there's more demand? Will prices continue to fall, will they overinflate again, potentially even going in some markets to a point where they become unattainable no matter how low the interest rate is? It's possible. You guys following us here? So if you're talking to a buyer and they're on the fence about, well, I'm waiting for interest rates to fall, if they can afford the payment at the current interest rate and there's, an available home that they actually really like, let alone love, perfect. Get them in the house, remind them they can certainly refinance, and then just ask them, here's another crazy thing. If homes in your marketplace are inflating or appreciating by 5, 6, 7, 8%, we've got rental properties that are just even in this market. You read all the headlines, you think this isn't happening. We've seen our own rental properties that are inflating in value by almost double-digit percent. Well, I want you to think about if you bought the house today, Mr. Buyer, and I know the interest rate's 7%, and that's, you don't get the warm and fuzzies from it. I get it. But, the house is $400,000. If the inflation or appreciation rate 12 months out is, if it's been 10%, the house is now worth $440,000. So your payment, Mr. Buyer, was, essentially, let's say all in $3,000, and the interest portion of that was say $2,500. Your house is actually inflated or appreciated in value more than the interest you paid on that loan. So your worst case scenario here is do the math, but you might be living for free. This is understanding how to move past the hesitance about the high interest rates. And then again, always reminding that they can refinance as soon as the rates fall. They're not losing out What will the house be worth in a year? 440. Now add to it, if rates fall, the increased demand, it could be worth even 500,000. Then they actually might not be able to afford the house, even if rates fall, right? So
That's
they
right.
might, by waiting, because they're waiting out their rate, they actually might have the train leave the station and they might not be able to buy a house at all. We have seen this happen. We've been in the business for more than 2 decades. We have seen this happen via coaching clients many, many times, and that's going to happen again because people are trying to time the market. That it just never works. Julie?
Well, you know what's really great about using our AI slaves is that you can work out a lot of this math. You can take your exact scenario. Maybe it's some, funky amount. So you've got a buyer that's pre-qualified to say 678. You can compare them purchasing a house with 20% down at today's rates versus waiting and then spinning up based on, take your average appreciation for your past, 6 to 18 months in your market and make that math comparison that you just laid out. You don't have to try and do that in your head. Just
Mm-mm.
use your AI to create charts and graphs and what's the cost of waiting. I saw a great graph that an agent had made. They were talking about how high rates were in the 70s and early 80s, when our parents bought their houses. And they compared the difference between, of course, everybody was saying, well, I've got to wait. Who would pay 18%? You guys think it's terrible to pay 7. Who would pay 18%? And then they looked at how much those houses were worth 20 years later, which is the first time rates got under like 11% or something. And it was not even, it wasn't even worth discussing how much worse off the person who waited was.
And you and I are only talking about the numerical aspects of this, the
Sure.
money aspects of this. But in all reality, buyers, they're not really thinking like that. They're thinking, can I afford the payment? Do I like the house? Is this a place I can feel safe and secure? The financial stuff is the back end of the decision making. It's very rare unless it's an investor or somebody who's maybe trained to just, think about numbers, super analytical type. Those are the only types that are really going to be overly sensitive to the sort of, money stuff we've been sharing with you guys.
Mostly an emotional decision. Buyers get excited when they find a house that they want to live in.
And if they can afford
we're the ones that get stuck as real estate professionals that get stuck in this whole analytical mess.
Right. We're just this last point was just trying to help you guys to understand that interest rate really is an important aspect, but they're not going to have that loan. They're probably not going to be in the house for 30 years, let alone have the same mortgage for 30 years. It's just a temporary thing. Get the house, beat future value increases, and stop thinking that prices are falling. Stop thinking the housing market's going to crash. Anybody who sends you an email, who posts on social media, who says anything anything other than housing is going to continue. Yes, there might be a little reprieves in certain markets. That's called normal. But beyond that, anyone who's trying to tell you that housing is not going to be a continued valuable asset well into the future, well past the, decades and decades in the future, I honestly, I don't know whether or not they're willfully ignorant, or rather, I should say blissfully ignorant, or just straight up just knowingly not telling you the truth. It's one of the two. Because if you just take a little bit of time to research the realities of what's going on in this market, you'll realize that, yes, the past 2 or 3 years has been challenging to a lot of agents and brokers, but there's no question that we're at the bottom and we're going to start seeing an increase in home sales and increase in demand. And that's pretty fantastic. And I hope you guys are as excited about that as we are. So Julie, let's wrap up for today. So if you guys want the notes, remember, and Julie's got a lot of good notes here. There's 3 pages of them. They're available exclusively on our newsletter. So just go to harrisrealestatedaily.com and subscribe to the newsletter. The newsletter costs you nothing. The notes cost you nothing. All you got to do is put in your email and you'll get this really pretty newsletter every single day that it does include all the notes from today's show, in addition to a lot of other content we make exclusively for our newsletter subscribers. So in the meantime, thank you for keeping this the #1 listened to and downloaded real estate coaching and training podcast. We certainly appreciate your continued support. Talk with you on the show tomorrow.